Hey, everybody. Welcome to another episode of the Cackle. This is where we meet with Midwest change makers and connect the dots between economic trends and the lived experiences of people navigating them. I'm Emily Heinz. I'm the founder and managing director of Entry Point. At Entry Point, we partner with economic development organizations and nonprofits to foster inclusive and vibrant communities across the Midwest through research and community-focused programming. So if you are looking for an insider's take on the opportunities and challenges facing today's most inspiring change makers, you'll definitely want to join the conversation today. Just for economic developers and nonprofit professionals, a heads up, Entry Point's going to be hosting a virtual session on May 7th called Strengthening Your Impact Through Data. You can sign up. We'll put the link in the comments, but you can sign up and we'll just be talking a little bit more how to utilize data to better support the community you serve. And if this is your first time with us, welcome. And if you're a repeat cackler, we're glad to have you back. And today, with me today is Mike Asem. I told you, Mike, I say, as soon as I am about to say it, I say it wrong in my head. Mike is the founding partner of M25. So exciting. I am so excited to see your face.
Yeah, thanks for having me.
Yeah. Mike, for those of you that don't know, Mike is like a very amazing investor, venture capitalist here in the Midwest. People, like, everybody loves you. As soon as I was saying that, like, you're going to be on the Cackle, everyone was like, oh, Mike's so great. We love Mike. And I was like,
very Midwest thing to say, by the way.
Very everyone said, oh, he seems so nice. So, and you are, I feel like, really good at really bridging the gap between all the states. Like, I find a lot of times when we're going, like, we are very Midwest focused also. And like, when you first are like talking to people in Chicago or talking to people in Columbus, they're kind of like, so where exactly do you live? You better be in this state. But I feel like you're like so good at like making these partnerships across state lines and kind of like doing the work really authentically. So I love that. So I was like excited that you're gonna be on today. So talk a little bit about how you became a venture capitalist and kind of like your entrepreneurial journey.
Sure. Yeah. Well, like I said, thanks again for having me. Yeah. I am all champion, all Midwest, but I did grow up in Indiana, West Lafayette, went to Purdue, and that's where I'd say my entrepreneurial roots were born. I actually, if most people are familiar with Purdue, they know it as a STEM school, great engineering, arguably best Big Ten engineering school. Just gonna throw that out there. Later. But I didn't go there for that. I went there for liberal arts, which was like the nightmare of my father, and studied something called public relations and rhetorical advocacy, which literally isn't offered anymore because no one knows what it means. But basically the reason why I studied it was because I knew I wanted to be in business, but I also thought it would be phenomenally interesting to capture how companies like Apple at the time was what I thought about, could build almost like interpersonal level or interpersonal relationship level of loyalty with their customers, right? Like, I mean, I more often probably see someone fight green text versus blue text than like for their cousin, right? So I think that's really powerful how a business could do that. And that's why I studied that. But on the side, I taught myself how to code. I taught myself Ruby and Rails. I taught myself front-end JavaScript, and was a hackathon competitor. I would definitely not say I'm an engineer or developer, but I like to be conversant, and ended up founding something called the Anvil, which at the time I left Purdue was the largest student-run co-working space and incubator in the country. It was a separate 501c3 nonprofit. We launched thanks. We launched the first Purdue companies to go to Y Combinator, and since then I've launched multiple companies out of Purdue to go to YC, multiple Purdue companies to raise millions of dollars in VC, including one that was acquired by HackerRank not too long ago, and another that's now I think the fastest growing tech company in the state of Indiana. So
that's awesome.
So that's where I got started.
The quick question about that. So like, how do you feel about kind of like this, you know, there's like so many things now where like universities have like Center for Entrepreneurships and like things like that. And like now it's like a minor you can have, which like when I was in school was like not a thing. And now I see a lot more. Like, how do you feel about like being able to like teach entrepreneurship? Like, is that a skill you can teach, or like what's your view on all that?
Totally. And, I might have an unfair advantage at answering this because my next phase of my career was I did a startup as a first employee, and then I was a director at the Purdue Research Foundation.
Oh, perfect.
At the Foundry. So I've worked
How did I not know that?
I've worked in the Entrepreneurship Center. I've started an incubator at Purdue as a student. So, it's funny, like we try to make an analogy, right? Because everyone's trying to understand what's the difference between all these things. And Purdue also has an Entrepreneurship Certificate, which has been a great program, interdisciplinary program for a lot of students to go through. But the way I described it was you had the Entrepreneurship Certificate is where you learn about what entrepreneurship is. You read about it, you learn about it. You go to the Foundry or the Research Foundation, kind of the incubative organization within Purdue, to get more of the tools, right? To go through like Lean Launchpad or learn Lean, methodology, business model, canvas, et cetera. Get a little bit more hands-on tools and training and programs, access to capital and things like that. And then you go, in our case, to the Anvil to put the tools to work, right? To go ahead and like try to make something.
Yeah.
Try to go from 0 to 1 in some way. And probably the best way I saw that exemplified was in Purdue, we have the Burton Morgan Center for Entrepreneurship and Burton Morgan Business Plan Competition. And the business plan competition has been great. It's been a way for students, like most universities, to go pitch and get tens of thousands of dollars for their idea. And with the Anvil, I did something called the Boiler, which was actually like a mini accelerator competition, where instead of kind of worrying about the business plan, we had people pitch an idea, put together a quick deck. And then it was like a 10-week process where they were measured based on traction and market validation they were able to generate on their unique idea. We gave them $500 at the beginning, $1,500 in the middle, and winners got anywhere from $5,000 to like $1,500 to $5,000. But it became a traction-based or market validation-based competition, and that's I think the sweet spot of what's generated these actual startup companies.
Yeah.
And raise VC and get into YC and all the fun stuff that people want to do.
Yeah, that is so. Is it mostly all focused on like startup companies, or do some people go off to start like retail companies or things that kind of are not tech enabled?
Yeah, there's been some of that. I mean, when I first started the Anvil, I knew that the most important thing was to help create and facilitate a community of people trying to make things happen, not necessarily people just trying to raise build venture-backed startup tech companies. And so we had everything from nonprofit founders in there to kind of CPG retail type founders in there. And I would say the competition winners tend to generally be in that kind of tech genre.
Yeah.
But yeah, absolutely.
Yeah, I'm an entrepreneurship fangirl, so I always like to hear things like that. I'm like, yep, we need more of those. I just love how like entrepreneurs, now we're getting real off topic, but I just love how like entrepreneurs, like they create their own jobs, and like kind of like as an entrepreneur, I feel like we like can do what we want and like kind of like learn the learning path. And it's kind of like all these continual lessons. And it would be interesting to kind of go back and like audit one of these classes that's like teaching people how to be entrepreneurs. Cause I bet I would be like, oh yeah, that would have been good to know. Great. Yeah, that took me 8 months to learn the hard way. That's so cool that you guys can learn that in 1 month. In one lesson here. They're like, hey, don't do this. Like, So you and M25 are very well ingrained in like the entire Midwest entrepreneurial ecosystem. Like, why focus on the Midwest other than like being from there?
Yeah, I think the like long in the tooth story for the Midwest is funding gap, opportunity, be there where no one else is, et cetera. That's obviously part of our thesis as well. But I think maybe a bigger part of our thesis was fully understanding like we thought that there's an opportunity here, knowing that you can build a company anywhere with cloud infrastructure and all the new wonderful things that come with digital technology, and the talent, et cetera, in the region. We saw a specific opportunity if we're able to help catalyze, create, bolster what we call virtual density in the region. And when I say that, to give some context, right? If you think about the region of the Midwest and its economy, it's massive. We've got tons of Fortune 500s here, great talent, great universities, massive economy for the region. And compared to like SF, Bay Area, compared to New York, Boston, like pretty comparable, and in fact has some advantages. A major disadvantage is lack of density, right? Like it's just harder to get from Ann Arbor to Kansas City than it is to get from Palo Alto to SF, right? It's harder to get from Pittsburgh to Minneapolis to Lexington than it is to get from Purdue to Cupertino to wherever you're trying to go. So we saw like our ability to, as an extremely active investor, you mentioned we're based in Chicago, but we're the most active investor in multiple other states in the region. And not only through like our own portfolio founders, but also things like our Midwest, our M25 Summit that we do, which I know you've come and checked out, and our like MidwestStartups.com is a resource that we've created to help do everything from elevate voices in the region to create a talent portal to create kind of like navigation for anyone trying to enter the region or get more out of their own ecosystem. We're doing things like that to help try to solve that density issue in a way that turns the challenge gives the Midwest like an unfair advantage now that they have this, have always had this massive economy and diverse skill set and customer base, but now don't suffer from the lack of density that puts them in an unfair disadvantage.
Yeah, that is really interesting. And I think you guys really are great at building those ties. Like I said earlier, kind of like being authentic. Like it's like, I feel like you are very present in like the Michigan ecosystem, and same as like I went to something like an annual dinner in Ohio and saw Victor there, like like all these things. I feel like you guys kind of are showing up in like all these spaces. We just developed the annual research report for the Michigan Venture Capital Association, and like on there I give you a little tiny shout out because like you guys are like one of the most active out-of-state investors in Michigan, in the Michigan ecosystem, if you were like to draw the state lines and everything like that. So it was like you guys and Revolution, which is like Steve Case's fund. So I feel like that's like, I'm like, oh, hi, I'm doing very good. How do you look at like building those relationships? Like how is it that like you guys feel like everyone's like local investor across state lines and things like that?
Yeah. I think we realized that the fact that we're actually willing to spend time in these ecosystems and cut checks before others are willing means a lot, right? And, a lot of these cities too, if you go to Chicago, or, obviously you go to SF or New York, like raising $1 million is kind of, like, who cares? It's like, well, why'd you just raise $1 million?
Yeah.
You just don't want to build a company, or no? But
you don't like trying in life or something.
Yeah, right. But in most Midwest cities, it's still a big deal. And like, at this point, M25s, we're writing 250 to 500K checks. We're willing to be in rounds as small as $500,000 or as large as $2 to $3 million. And we're wired a little bit differently in that we're not looking for, call it revenue traction, the same way that many of our colleagues are. And to be fair, a lot of them are later stage. A lot of them are focused, even like just call it later seed than us. And so I think that it means a lot when we can now say we've invested in over 100 companies in 24 different Midwestern cities, 23 of those not being Chicago.
Yeah.
And our founders tend to say good things about us. All the local entrepreneurs tend to ask the founders that have successfully raised venture, like, hey, who actually cut you a check, and how good are they? Are they good investors? Are they good partners?
Yeah.
We actually get pretty phenomenal connectivity through our founders, which I think is a reflection of kind of our, kind of biggest tenet is that like capital is a commodity. And if we want to be successful as venture capitalists, we need to be great partners to our founders. Yeah.
I read something that you wrote, I think that was in TechCrunch, like last summer. Is this ringing? You're like, I don't know what you're talking about, lady.
It might have been VentureBeat. Yeah.
Like being a good partner with startup companies and like with founders. And I think that you do kind of tend to see like two kinds of investors, like ones that like really, really respect the founder and are like there to figure out how to support the founder. Like Walt Young, for instance, is an angel investor in West Michigan, and he like is always talking about how like people think like some investors feel like if they give $10,000 to a company, they like have the right to have like 2 a.m. phone calls with them and like run them through the ringer and all that stuff. And then like founders like you guys that are like, or, you know, investors like you guys that are really focused on like building that authentic relationship and being like true partners. Like, how do you like, how explain that? Like, how do you kind of do that relationship?
Yeah, I think the piece you're probably talking about is founders need stewards, not masters.
Yeah.
And I, you know, so it's funny because I've talked about VC before. You know, we're in finance, right? We're in the finance category. Professionally, I'm in finance. My wife laughs out loud when she hears people say that, and it's somewhat insulting, but it's also somewhat fair. Because, you know, granted, I am a liberal artist in finance, but also she kind of understands too, like what my job actually looks like and what type of data we're making decisions off of and how business happens here. And it's really more about human behavior, a cluster of human behavior around capital, around risk capital, which, you know, it's not monopoly money, but it's also not the same money that's in, you know, my checking account. Right? It's got a different purpose in the world. And understanding that, and also that with these businesses, you know, I think it's important to understand that entrepreneurs are, as much risk as I think I'm taking by writing $500,000 check, like that founder is taking exponentially more risk by trying to go punch a hole in the universe with some insane idea that arguably is impossible, or else someone else would have done it already.
Yeah.
And the stress it puts on them to do that, you know, lots of investors say, we think the most valuable part of a company, especially early stage, is the team. Like team, market product team, right? Like so many investors say things like that, but I don't think so many realize that if you don't honor the team, if you don't steward the team and their resources as their own, as if they were your own, then you run the risk of, you know, compromising the most valuable asset of the company. So you can take an authentic, like genuine, like I care about people approach, which, you know, I actually do, but you can also even walk it back to like, no, this is good business approach. And I think, unfortunately, a lot of investors look at their roles, whether they're angels or as fiduciaries, and they're just like, my job is to extract value. My job is to find ROI and extract value. Like, and, you know, if people get hurt, that's fine. Or if people get run over, that's fine. People get burnt out, that's fine. But the reality, I think, for building a firm, building multi-fund success, like helping entrepreneurs actually be successful, is you have to be a good fiduciary. You have to be a good steward of their own resources, of their own time, of their own ability to spend time with their family, of their own ability to get sleep. I can't tell you how many times I tell founders, get some sleep. As you are your own fund, as you are your own capital, your own resources. And I think, you know, first of all, this ecosystem would be much healthier if people just took that stance. But I also think it's just better practice. I think it's better business practice.
Yeah, I agree. I think, why do you think that some investors don't take that stance? Just because they're so focused on like returns, and that's like their main priority, that they kind of like at the expense of everything else?
Well, I think it's somewhat like, I mean, we're in a pretty privileged spot. Like the power dynamics between investor to founder they're what they are. Like, you know, right or wrong, more often than not, a founder has less leverage than people with capital, because someone can arguably unlock dream potential for the founder. So there's entitlement that comes with a lot of folks that sit in that position for too long and don't really acknowledge it and like check themselves on it. And just honestly, like some people haven't actually been able to generate any true founder empathy. You know, I wouldn't put myself and my operator experience on par with most founders, like I said, at all. Like I spent time as a first employee in a venture-backed company. I've worked alongside founders running an incubator and being, you know, administrator at Purdue Research Foundation. I spent most of my career on the operator support side of the table, but still, I wouldn't say I've never been a venture-backed founder before. Mm-hmm. And even just, I think that limited scope and experience has helped me build a little bit more empathy and understanding for like hey, maybe these are the corners I should be looking around for the founder to help them understand, like, hey, like, let's go back to first principles. What do we really need to get done here? Actually, you know what? Don't spend an extra 2 hours on that board deck. I don't need it. Just write me an email, or let's talk about it, and then we'll have a more productive board meeting, right? Like little things like that. I think, some investors just haven't been wired yet to proactively think that way. So it's not always just like investors are bad people,
Yeah.
Scrooge McDuck, and they're like, oh, deal with it. I'm not saying all investors are that way. Some are, but a lot of it's just misunderstanding too.
Yeah, that makes sense. I like that. And then you mentioned the M25 Summit that you guys run. Explain that a little bit more for people and sort of like what the benefit is to the startup ecosystem.
Yeah. So, the event started as just like 20 or 30 of our founders in a room, went through like half a day of like talks, keg of beer, a couple Series A investors to do a panel. And that was a few years ago. Our last in-person summit, which was, actually like the week of like March 6th of 2020. So we barely got it in.
Yeah.
But, we had about 200 VCs from across the country. We had about 60 or 70 of our portfolio companies. It's kind of a 2-day affair. The first day is like hyper networking, where we do like a happy hour where everyone can hang out. We do an investor dinner and a founder dinner where those groups can hang out and network. And then, throughout the day, the bulk of it, we do these double opt-in one-on-one meetings. And so to be clear, like we only connect people where both parties have elected to meet with the other. They actually want to meet with each other.
Yeah.
We facilitated about, I think it was around 700 or so of those meetings in about 36 hours at the last summit. So we've had companies raise
a lot of organizing.
Yeah. Right.
You're like, or whatever, just sit down and talk.
Exactly. Yeah. But it's been super valuable for our companies, right? They've raised larger seed, Series A, Series B. I mean, they've raised all types of money through these, and it's even just like we do it twice a year. So it's created a really productive cadence, because as a founder, you're trying to time when to go raise, and sometimes it just makes sense to build relationships or do a preview or actually go hard and line up 20 meetings. And if you want to line up 20 meetings, you can for either of those, for any of those points in your timeline. But that's been really valuable. And the second day, we bring in thought leaders to do kind of like a Chatham House Rules closed session with our founders to kind of just pour into them, help them build better tools, build better relationships with each other, and grow as leaders.
Yeah, I love that. Yeah, I do like a thing like networking, being out in public. One day, I keep joking that like introverts are really gonna like have a time with us extroverts like in the next year. Like as soon as the pandemic is over, I have just a year and a half worth of annoying everybody to do. Like, hi everyone, hi, and they'll be like, oh my gosh, we just wish we were back in April 2020. Why? So I wanted to touch a little bit on your writing. So you are a regular writer, and I find that like it's really refreshing because you write a lot about like real issues. It's not like one of those, I find a lot of times you'll go to like blogs of people and it's like this very polished up, professional, over the top, like fake messaging kind of thing, where you talk a lot about like religion and like your beliefs and like systemic racism and like current events and things that are going on, like mixed in with like your experience as venture capitalist and kind of all of that. Like what made you kind of decide to like take writing and like kind of put all of that out there on a public forum like that?
Yeah. Thanks for that great question. I mean, I've written so many things that like are just in drafts, like throughout my life. I didn't realize it, but there's like different things I've just thought about writing about that, never made it because I didn't think it was worth putting it out there. Just being honest. And it's funny, like if you see my blog, the acronyms RIRTS for really, in parentheses, or rarely important random thoughts. And, I kind of mean it that way because sometimes, I'm just going through these thoughts, and sometimes I think they're really important. Sometimes I really don't know, and they're probably not important. But to answer your question, post the murder of George Floyd, I was getting, as many, Black Americans were, a lot of questions from all types of folks, including my wife, of like, how do you feel right now? Or what's your take? Or, all that stuff. And
yeah,
I don't think I really, as an African American, I'd been spending, sometimes you don't realize how much you are just compartmentalizing or numbing out, or just kind of like putting that in its box. And, it broke out of my box. I actually was going to meet with hang out with some guys online, for like, I know I do gaming. I do like video games and board games when I, have time. And, I had to cancel last minute one of my best friends because I was just like dying inside, and I just had to write something down. So I wrote, in kind of like a 4-hour regurgitation in the middle of the night, something that, was effectively my first post, Racism Won't Die in 2020. And that was just a really cathartic experience for me.
Yeah.
I shared it with, it meant just to be one of those Google draft things that never see the light of day. But I shared it with my wife. I shared it with a couple of close friends and mentors, and just got like, hey, you have to put this out there. You have to put this online. And so, I thought a lot about it. I took a leap of faith and did it. And, thousands of readers later, it struck a chord with a lot of people. It opened a lot of conversations up. It, encouraged me to keep writing on things that were, heartstring type things, and I'm glad I did it. It's been a really interesting experience putting my thoughts out there, but I'm glad that people have found some value in it.
Yeah. I find, like, I read the blog regularly, and like, and I know you like send them out like in newsletters and things like that. And you're like really great, like great insight, and just like really interesting to hear your perspective on things. And it's like a large variety of things. Like, I'm not religious, and some of, like, you are religious, and like reading just about like how you view like God's role in the work you do, and like all of that. I'm like, man, this is like such interesting perspective. I'm like, me and Mike are very different. But I find it to be really interesting. And I would encourage people like also to like look at your blog, and then like you do have something, I guess maybe I don't know if you have it anymore, but like some like function where people can actually like pay to support the time that you take to write and share these thoughts that like are really like critical for other people to learn from. And so like I like supported, but like I would encourage like other people too, if you like check out Mike's blog, to like support the time it takes to get your thoughts. Cause it's like, I think like we benefit from receiving that. And I think it's like, it's cathartic for you, but I think it's like really important work that you're doing. So thank you.
And to be clear, all the content's free for people can follow me for free, so they can subscribe for free. But I do have that option where you can pay. I think it's $10 a month, and that money goes directly to some philanthropies that I support already. But that money just kind of flows through to groups like Equal Justice Initiative and some others that are kind of making the world a better place. So.
Okay. Yeah, thanks for clarifying that. I'm like somebody just like also should be paying. Like I just like there's so much content out there, and then like I'm like, man, no, people should be paying. People should be paying more.
Well, I'm glad you're paid just for the content. I mean,
yeah, I mean, like, yeah, Mike's gonna write some things. Good for him. Like get this all out there. But yeah, so I was like, I think I was probably like. You like set it out there like, anybody want to support this? Oh, here's $100. Thank you very much. You're like, okay, you're over eager. Yeah. So what's on the, I know we're like wrapping up right here, but like what's on the horizon for you, like personally, professionally, whatever?
Yeah. No, it's funny. If people check my blog, they'll notice there's been a little bit of a slowdown. like last year was just insane. If you read the writing I did, you probably understand some of the emotional rigor I was going through. But also it was the craziest year for M25 as a firm. The pandemic was insane for venture. For us, it ended up being one of our best deal years ever. I think we'll look back and say this is an amazing year. And also we were, doing all different other types of things that VC firms do to build their firm.
Yeah.
Q1's been kind of like an insane kind of get back, feet underneath type of thing. So excited to get back and put some more content out there. I've got some pieces on my mind and on the horizon, and also just excited to continue. We're adding a couple team members. I think we're excited to see how, we can support our companies. One thing that I'd be remiss if I didn't mention is that, we're only an ROI seeking firm. Like, we're not an impact firm in any way in our mandate or anything like that. But as you know, our team's extremely diverse, and diversity is a value that we hold. And it's just exciting to see that of our current fund, roughly half the companies we've invested in are founded by Black, Latinx, and female founders. And they're all crushing it right now. Absolutely crushing it. And I'm excited. I think there's going to be some really good announcements over the next year or so of diverse founders, underrepresented founders in our portfolio, as well as outside our portfolio, doing some really cool stuff. So that's a really exciting thing for me to think.
I think it's so interesting too, like the amount of like adversity that like women and people of color have gone through over the last year or plus 400 years. But like over the last year of like all the stuff going, like all of the social injustice happening, like it's so stressful for people, plus just like the increased childcare responsibilities that ended up falling on like women. And then you're like, we'll just still see like women and people of color crushing it every day. Like, I'm just like, miracle workers, what? Like, I don't even understand how that, like, it's just like amazing. But yeah, so I definitely agree. Like, I think we'll be seeing like major scoreboard from a lot of those startups. So that'd be awesome. But yay. Well, thank you so much for the work you do and for coming on the Cackle. And it's like great to catch up with you when I never get to see anybody. I just sit in my house every day. The Cackle is actually just like my ability to still talk to people. Great. So thanks so much for being on. And then everyone else, we'll see you next week. We've got Trey Boynton from Cisco. She's also on our board, and she's like the world's greatest person ever next to Mike. Sorry, Mike. But I love her so much. So everyone should tune in next Wednesday at 10:30. And then I will see you all soon. And I will see you soon too, Mike.
Thanks.